Winston just said to me, Felix, everybody should own 100 shares of SoFi. And I said, why, Winston? He said, well, just run through the numbers, do the maths, and it'll become perfectly clear. And I said, Winston, that's a glorious idea. Let's do exactly that. And I'm going to break it down for you, golden retriever style. So this isn't financial advice. This is puppy advice. Look simply at the expected profit growth of SoFi. This year, 125%. Next year, 205%. The year after, 115%, 57%, 33% for each of the years going forward. Looking at that, is it unreasonable to expect that the stock goes up a fair bit? And let's just say, okay, maybe the next 2 years are priced in. Maybe the next 3 years are priced in. But let's go out 5 years. Let's just say we're going to grow 33% per year in terms of stock price over the next 5 years. Looking at those numbers, that doesn't seem like an insane thing to assume. And let's buy 100 shares and see what that actually does. So I'm using a compound interest calculator here. And 100 shares in SoFi are worth about $700 right now. If stock price goes up for 33% for just 5 years, that becomes $3,500. I'm going to take a screenshot of that so you can see what I mean and place that in here somewhere. I just don't know why I pasted that. And what do you see then? What's the next logical conclusion? Well, what happens after 5 years? Well, it's probably not going to grow at 33% every year forever because unrealistic, right? Let's face it, it's harder to grow in the long run. So let's look at earnings growth for the following years. And what do you get? Kind of the average of the market. And that's typically what analysts assume. You're going to grow like the market. Now, just go with 15%. Okay, let's just say we now have, what, $3,564. And it's going to grow at, say, 15% for, say, the next 10 years. Let's make it the next 15 years so it gets a nice round number at the end. And what happens? Well, you now have $33,000. Is that guaranteed? Is that assured? No, of course not. There is risk with everything. There's risk in sitting in your armchair. You could just die. But what you've done is you turned $700 into potentially $33,000, which is a pretty sweet return. And Papa Anoto is known for one thing, and that is sandbagging. He basically is very, very, very good at doing this, which is beating market expectations around earnings. So my view actually so far will do slightly better than the numbers we've just run through. So is this how you become rich? Well, yes, but there is always a but, isn't there? What's the but looking like right now? Do this, if you are going to do this, advice from Winston, not from me, in a Roth IRA. Why? Because you can put the money in now. So the money you put in is taxed. The gains are not. So would you rather pay tax on $700? Or would you rather pay tax on $33,000? That's hopefully a pretty obvious question, pretty obvious answer. So don't invest your money in taxable accounts. It's stupid. Invest it in non-taxable accounts, and it'll also force you to compound and sit there for longer and longer and longer. And let's just say that means you're going to do this for 25 years and say we still get this return. Then this now becomes $148,000. So you've turned, in theory, $700 into $148,000. Could they go out of business? Yeah, they could, like any old stock. So you don't want to put all your money in one egg in one basket, which is I'm going with $700, hoping that you have more than $700, because otherwise you need to go and get another job. And that's it. It's as simple as that. And this, of course, applies to every good company, right? Invest as aggressively as you can. By that, I mean as much money as you can. So the top of your paycheck each month, take the money away immediately. Do not wait till the end of the month and see what's left over, because you're going to want to buy something, you're going to want to go on holiday, and there won't be any money left, which means you will never get to the $33,000 or you'll never get to the $148,000. You still have 700, which sucks. I'm bullish on SoFi. I think that's probably fairly obvious. Doesn't mean you should be. And if you want to learn more about the data and the numbers behind SoFi, I will put out a document for you to download at felixfriends.org/SoFi, and you can get my whole research on the stock and all the data and everything else. So do that, download it, and I thank you for watching. If you enjoyed the video, share it.
Felix here, and there is a massive rumor swirling about on Reddit regarding SoFi, and I think it's important enough to explain it to you because it could be the post-Easter surprise at the coming earnings.